Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is January 5th, 2012. Lots to talk about, so let's get started. It is 4 a.m. in the morning. And first of all, like always, I want to say thank you very much for hitting that like button. Thank you very much for watching these videos and subscribing. I also want to congratulate Favco for taking a trade at this candle here, which was a candle which was a definite reversal candle. It was on higher volume. It just wasn't on higher volume for the past 3 days, which isn't part of my rule, so I could not take that trade. However, you did. Congratulations to you because you had a nice pop on Monday and it continued through all the way through see Wednesday, Thursday, and Friday here. So congratulations to you. You must be sitting pretty in a lot of money there. In addition to that, you probably already have this in place, but in the money stop is probably a recommended thing to do. Now, for me, so there's two. We talked about this candle here in last week's video, and I'm just going to get right into the analysis here because I don't want this video to take too long. I know I always say that, and it ends up being long, so I'm just going to keep that in mind here. We had this long candle created, which is definitely a reversal pattern. This is called an engulfing pattern, where you have these two candles here. Okay, you have the day before, which is Friday, and on Monday the body completely engulfs Friday's candle. This is on a technical level called an engulfing pattern, and an engulfing pattern is a reversal pattern. After a down move, you create this engulfing pattern at a support line. Okay, that's one of my rules, and then you get a pop higher. That's just this is very basic technical analysis trading, and we have support right here. Okay, now the reason why I didn't release a video as to me actually taking the trade is for two reasons. First reason is I did have a trigger here, but it never got there. Unfortunately, I missed this trade. Wah wah wah. Yes, I cry. I do feel no, I didn't really cry, but I do feel very, I feel sick about it sometimes when it doesn't hit my trigger. But at the same time, I have to stay disciplined, and I gotta follow my rules, and rules are rules, and that's what keeps me out of trouble. This is the same scenario as the gold trade, the gold short trade that I missed. It came really close, but it didn't quite make it there. Okay, now the second thing is that this candle is huge. It is just such a long candle. I mean, a consolidation or a pullback was likely in this situation, but instead, and I'll talk about this later, we gapped up way higher, and I think made a $3 plus move in a single day. However, if this candle had hit at least a 200 moving average, based on the volume that I was seeing, I mean, this is just a ridiculous amount of volume here, I would have taken a long trade. But again, I just missed it, so I stayed out of it. Why did I stay out of it after this trade? Because the candle was too long, okay? And it would, because the candle was so long, it would just be bad for me to chase. Okay, yes, it probably would have been a good decision, but it would have been bad for me to trade. Okay, I mean, it's just a standard thing where you don't want to chase, especially after a move like this. I mean, if you look at a candle, if you look at this candle here, and you grab this line and you move it to any other candle, any other candle, maybe even this one, even all these red candles, it is a huge move, and you don't want to, in my opinion, unless you were already in the trade, like Favco was in the trade already on this candle here. Unless you were already in the trade, there's no reason to chase. Even though we had a nice $3 pop, there's just no reason to chase based on technical analysis alone. Now, if you are a fundamentalist or a fundamental analysis, you may have taken this trade based on the fiscal news and whatnot. So moving on, we have this candle here, which was Wednesday's candle. Obviously, because we had a holiday, which was the New Year's. And amazingly, these mathematical calculations continue to hold up. This 145.07, let me just switch to the 10-minute chart real quick. Alright, this is a 10-minute chart. I actually stretched this day out. So this actual, from this candle all the way up to here, this green candle here is actually on that day of, what was that day? Wednesday. Okay, if you look here, this candle actually opened at 145.11, or actually the low was 145.09. So this was a 2 cent difference from the 145.07. So this was actually that close, was just 2 cents off. We opened here and we kind of just traded to the side around this level here, and then we popped higher. So switching back to the daily chart, you can see how it just opened here, we kind of bled down, and then we popped higher. Okay, and that's at the 145.07. So again, these mathematical calculations, as for you regulars that always watch these videos, you guys know that just three things that can happen. It can be either an intraday trade, it can be either a swing trade or a multi-day trade, or it's going to be a gap up or gap down situation. In this case, it was a gap up. So we gapped up right onto this level and then continued higher. If you gap up into this level, then I would not take a short trade, because even though it came down, because it opened above this level, so that would tell you that it could potentially go higher. And so in a day trade, that's what you look for, any type of long trades, when it opens on one of these mathematically calculated levels. But you can see how accurate these things are. Okay, so in any case, let me just remove these lines here and I'll be right back. Alright, so I removed those lines over there, and the only reason is because I don't want it to look too messy. Alright, so I made another mathematical calculation at 149.51. And I was like, what? 149.51? I think there's going to be resistance at 147.05. Yes, that is a possibility. Let me just zoom out over here. That 147.05 level was created September 7th. So I'm not sure how strong this is already, how strong these lines are going to be, or I should say the 147.05. Remember, another rule about the 140 about these mathematically calculated levels is that once it's used, you cannot depend on it anymore. So it was used here on 9/13, so September 13th. It was used again and worked. So on September 13th, we had an intraday pullback here. You guys can see that on this one single long candle. It went right into what was the high of this candle, 147.04. Okay, so it was 1 cent off. The high, if you just look up here where it says H, the high of this candle was 147.04. The mathematically calculated level was 147.05. We had an intraday pullback. The next day we actually pierced through it, created this reversal candle. It wasn't on higher volume from the past 3 days, so obviously I didn't take the short trade. But I'm sure a lot of you probably already did or did do that. It's just my rules are unbelievably strict, because in the past I've lost so much money. I rather not be in the trade than lose money. But obviously, taking a step back here, all of you who are watching these videos, don't think that my way of trading is the only way of trading. In an example like Favco, he made a trade based on his rules, and he should be sitting pretty in a lot of money right now. And that's just the thing. I mean, if you watch somebody else's video, including mine's, and you see a set of indicators that anybody else uses that works for them, it's going to work for them. If it works for you, then it'll work for you. But sometimes it doesn't work for you. And this is another reason why I made these videos, and another reason why I made these mathematical calculations, and I had that drive to figure something out, to make my own indicator. The reasons are, I used to be one of those people where I would go out, I would hunt for these YouTube videos, I would hunt for any kind of other thing that I can do, subscriptions and all that other stuff. And what I find is, when I learn from somebody else, don't get me wrong, it's a good thing. It's good to learn from other people, their styles, their tactics, and how they trade, how they enter, and all that stuff. But another problem is that their trading strategies didn't necessarily work for me. So what I did was, I went out and I found what I thought, or who I thought was the best traders out there that I could find publicly. And I would grab one or two things from each one of them that I felt was their strongest. Meaning, everybody has their indicators, but certain ones are stronger than others, right? And certain people like certain indicators more than others. What I would do is, so if I tracked trader A, trader B, and trader C, trader A may have 5 indicators, trader B may have 5 indicators, and trader C, so on and so forth. What I would do is grab one or two of their strongest indicators and then combine it into one methodology, I guess you could call it, and then that is my own. Certain indicators I don't like because it doesn't work for me, and what I mean by that is, it's just, that's how technical analysis works. Even though it's technical and is black and white, a lot of times technical analysis is not black and white, such as drawing trend lines and stuff. Everybody draws them differently. Everybody sees head and shoulder patterns differently. It's just a matter of personal preference. But in the general population of people draw the trend lines the same, except when it comes down to price. That's when the actual price differences matter. So I could draw, for example, I could draw a trend line like this. However, another person, and he could be a professional, don't get me wrong, could draw it something like this. But as you can see, price has already changed. It's at 143.80. But my price will maybe be, because I want to grab the tips here. And my rules are, you are allowed to cut through the wicks of the candle as long as you don't cut through the body. And now my price is at 143.85, 143.45, and that's a 35-cent difference. That's a huge difference, okay? But regardless, that is based on personal preference. And even though it is technical analysis and this is how you draw a trend line, the general population will draw it the same and the differences won't be much. But if you trade the way we trade, like short-term traders, that 35-cent difference will be a lot. Anyways, I just wanted to mention that before I move forward with these mathematical calculations, because I don't want you guys to think that, oh, just because I didn't take a trade, then I shouldn't have, or I did take a trade, so I should have. It's just, you guys watch these videos, you take it for what it's worth. I would use these videos as supporting evidence of what you think is going to happen. So if you think it's going to go up, and I say it's going to go up, then maybe that's supporting evidence. I don't know. But anyways, I'm just going to move on. I'm already into 11 minutes, and I've actually forgot what I just talked about. Anyways, so starting over here, we had this pullback. I know some of you already took this trade. We went back into the 147.05 level once again, and then already we could create this trend line, and this trend line has been holding up. Therefore, as it comes down, we no longer use this 147.05 as a level anymore, and then we come up and we pull back right on this trend line, just like clockwork. Okay, we actually created this doji candle right on this trend line, so that was a good shorting signal. It was also good shorting signal because the volume was higher than the past previous 3 days on the volume, so the short trade was taken. Now, so what does that mean? The 147.05, is that still a legitimate level? Yes, it is, but is it as strong? No, because on a technical level, after this candle here on the intraday pullback, it no longer should be a 90% trade, or a 90%, I wouldn't say guarantee, but a 90% odds in your favor that this level would probably hold. Therefore, I would not have that much trust in this 147.05. However, with that said, and I know this is going to sound confusing because this is going to be a difficult analysis for today. It's going to be very hard because of all the fiscal cliff news and whatnot. And all this talk about QE3 and QE4. I think it was QE3 being canceled by the end of 2013, and QE3 is supposed to be a uncapped QE3, meaning an unlimited one. I was actually surprised there was a QE4. It just didn't make sense to me if QE3 was unlimited. In any case, 147.05 could potentially hold out here. Why? Because we have this upper trend line here that was drawn. This upper trend line, let me just delete this upper trend line here. As you can see, it was actually not a trend line, it was a channel, and that's why it looked kind of messy. So if I just grab this over here and I draw a trend line like this, all I need to do is duplicate this trend line here, redraw as channel, and then that's how I come up with this upper trend line here. Actually, I could move it a bit, just like that, and we have this pivot of this candle here, this pivot here, and the pivots up here. So it would make sense, and it is very messy, so I don't really like it very much. But I will say this, I would be very tempted, very, very tempted, if we create some kind of reversal candle, whether it be a shooting star, a doji candle such as this. Shooting stars actually look like this. Shooting stars are inverted hammers, except on the top. Okay, if I had a candle that was created like this, or let's just draw a line straight across over here from the tip of that previous candle. This here could be also resistance. So if we have like a doji candle that was created a doji candle that was created like this, then I'd be very tempted to take the trade if the volume was higher than the past 3 days, so at least maybe around this high. Okay, so again, I got to stick to my rules because I have to be disciplined. And if I miss a trade, I miss a trade. And you guys all know I miss a lot of trades. But you guys also know that when I take a trade, I have a 90% odds in my favor that the trade is going to go in my direction. However, 10% is still a big difference. Just keep that in mind. Meaning, there is still that chance that I might be wrong. All right, so here's the biggest thing. You need to be able to close on Monday below the 147.05. A pierce is fine, but any type of reversal candle and a close below the 147.05 on higher volume, I will probably take a short trade, and this would be a counter trend trade. What do you mean by counter trend trade? Because the trend on the daily is confirmed up. We talked about that earlier. Even though the markets still do look weak, the trend is still up. Okay, so at the 147.05 level, there might be an intraday pullback or a multi-day pullback. Regardless, if I get a reversal candle on higher volume, I may actually take the trade for a short-term pullback. What does that mean for you long-term? For you long traders, traders who are long, put a in the money stop because this guy could reverse. And if it does reverse, I don't think it's going to reverse very far. It may do a gap fill kind of thing and then bounce up. So it really, right now, again, until the trend changes and until it confirms a change, we are currently in an uptrend, and you do want to be, trading with the trend, because the trend is your friend. That's what you always hear. Now, here's another thing, right? To keep in mind that because I'm gonna do a counter trend trade, I will probably stop out at the 145.07, which is about the gap fill here, which is where it opened. Okay, and then potentially, if I get a reversal signal again, I need the reversal signal on higher volume before I go higher. Okay, or before I take a long trade. Alright, so I'm quickly switching to this weekly chart here. The weekly chart is the exact same thing. It is a confirmed uptrend. There's nothing telling me right now that this guy is in a downtrend. Let me just draw a line over here. Actually, that's not too pretty. I'll draw a line just like that. Alright, so we have this channel over here. We could potentially go up all the way over here. So where is that 149 level? That's about the 149 level over here. Oh, let's talk about that mathematically calculated level again. Let me go back to the daily. Alright, this is the daily chart. Back again. Sorry about that, guys. Alright, loading this drawings here. 149.51. Unfortunately for me, the 149.51 is where my mathematically calculated level is. It is the calculation. I was very disappointed in seeing that the calculation was made and it was that far away. Again, it's just a mathematical formula that I put in a bunch of numbers based on a specific pattern that every chart makes, and it creates this it spits out this number, right? Or it spits out a bunch of numbers actually. And unfortunately, I mean, I really wanted to see another mathematical calculation around the 147.05, which will validate this mathematical calculation that was created in September. However, it didn't. Something like this, the 130.31 was created November 16th, and it validates this 129.32 because it's close enough kind of thing. But I got nothing close to the 147.05, and I did this calculation 2 days ago, okay, on Thursday. So that just means that this 149.51 is a potential that it could get there. Now, I will not take a long trade thinking that it will get there. You guys know that until it hits my level, I'm not going to take the trade, but I'm not going to take the trade based on thinking that it might hit that level. You know what I'm saying? So keep an eye on this 149.51 level. I don't know if it's gonna even get there. There's a potential, and another reason why I would take a short trade at the 147.05 as a counter trend trade is because we are in a overbought market as of now. Okay, so just keep that in mind. So I may put a trigger here to short the market at this tip here just to be safe, and I may skip the 147.05 level, and then I'll stop out on any close on the 149.51 if I wanted to do that. It is a higher risk trade, and again, I'm going to be very disciplined on this short trade if I even take it, simply because it is not a very clear picture type of market based on all that news that's out there today. Okay, now let me switch back. Oh, alright, so 19 minutes. Alright, so a lot of information in such a short amount of time. Do I think it's going to go higher? There is that possibility. Why do I think that there's a possibility? Because there's nothing telling me right now it's going to go lower. But you have to keep in mind, look at the volume. The volume, high, low, low, low. The volume is going down. It's going lower. Okay, let me just zoom out here. It's going lower. And let me delete all the drawings here so it's easier to see. All right, so now we have from this candle, we have high, higher, and higher. Okay, the market's going higher, but the volume is going lower. We talked about how valid and how important volume is. If the volume isn't high, it cannot confirm price. Just like the eBay scenario, the eBay example. If, I'm not going to get into it, but you need the volume to validate price. So this basically is telling me volume is depleting, but the market's going higher. Do not trust it. Okay, that's another indicator of what may come soon, where we may actually have a pullback and it may be actually larger than I expected. Regardless, I want to be on that short trade when it happens. Okay, so that's my thought process. So you guys all know what I'm thinking about right now. Whether or not you want to take that same trade, it is going to be a higher risk trade, so I may not put as much into it as I normally do. Okay. All right, so same thing in the weekly. We have this now we created for this week in a what people would think is a bullish consolidation pattern. Sorry, bullish engulfing pattern. Why do I not think this is a bullish engulfing pattern? Because look at these two candles. On the weekly chart, we only have 2 days of downside movement. Actually, on a technical level, in my opinion, this is just 1 day here. This is actually the pivot, and then we have 1 day. This does not constitute you got to remember now, an engulfing pattern is a reversal pattern. So on the weekly, at least, this is not a reversal pattern because it didn't even come down. It's still going up. Okay. So just keep that in mind, that I would not jump on the long side, even though it is a confirmed uptrend here. Okay, because we might lose, because we're short-term traders, we have a lot of money into the market, and we may lose a lot during the day, and that can emotionally have an effect on you, and it may stop you out sooner than you should have. But in any case, moving on. Let's see. All right, I'm already into 21 minutes, so I'm gonna answer Favco's question, 2010, Favco 2010. Um, can you do an analysis on XLF or XHB? And yes, I definitely can, and I will, because nobody else has asked anything. And possible beneficiaries of QE3 and QE4. If I'm understanding your question correctly, from what I heard, and I guess, and again, I'm not a fundamentalist type of person. I'm not an economist type of person either. I have a lot of friends who majored in economics and whatnot. However, to my understanding of QE3 and QE4 is very basic. And to the basics, sometimes understanding the basics is better than understanding detailed things, because when you get too much into it, it can kind of fluster your decisions and what's going to happen, and it may start confusing you. So to my very basic brain, because I have a very basic brain, I'm not smart or anything, what I can see and how it relates to the markets is simple. This year we had Operation Twist. I'm not sorry, not this year, last year, which was 2012. Oh, gee, in the beginning of this video I also said 2012. It should be 2013. Haha. Anyways, last year we had QE3. Did we have QE2? I believe we also had QE2, if I'm not mistaken. That expired last year. We had also Operation Twist. Operation Twist was another type of quantitative easing. And then we had QE3 on top of that. And then we had QE4. So we had all of these quantitative easings, including the Operation Twist, which was basically another type of quantitative easing. They just didn't want to mention it to be quantitative easing. And what that's basically doing is it's devaluing the dollar. No matter how you look at it, we're printing money. I think the Operation Twist was buying bonds back from somewhere to do something, and that devalued the dollar again. And basically, I know I haven't talked about the dollar in a long time, and it's because we all know that the dollar is inverse to the markets, and so the dollar is normally validating what the market is supposed to do. So we'll take a look at the dollar, but I want to answer your questions first. Operation Twist actually was supposed to expire, I believe, in August or something like that, and they extended it to the end of December, which means Operation Twist is now expired. QE3 came out to be an uncapped QE3, meaning no limit type of QE3, and then on top of QE3 last year they dropped QE4. So this year they're talking about getting rid of QE3, which is supposed to be an uncapped QE or quantitative easing, and if that happens, then I'm thinking that they're thinking about cutting that off at the end of the year, and if that happens, then what we're going to have is a issue in 2014, and 2014 is going to be a very bearish year, in my opinion, if that happens. Basically, to make a long story short, if you devalue the dollar, the market's gonna is gonna lift. And Uncle Ben, which is Ben Bernanke, his thesis was that he believed that if you devalue the dollar, it'll prop the markets higher. Well, I'm just kidding. If you prop the markets higher, no matter how you manipulate it, then you are gonna fix the economy simply because people are going to feel more comfortable spending money because the news, which is the biggest advocate of the whole way of how our country works. Everybody listens to the news, so if the news says, "Oh, the Dow went up 1,000 points," everybody's gonna be happy, go out, eat all the time, and buy whatever kind of purses, $700 purses, ridiculous money. My wife does that sometimes, anyways. Spend ridiculous amounts of money and putting that into the economy and thus growing the economy. But how do you prop the markets higher? That's simple. You devalue the dollar, so you keep printing money. But in the long run, that's going to bite us in the butt, and that's going to leave us hanging, and that's going to cause a lot of issues because sooner or later, you can't just keep printing money. Sooner or later, the U.S. dollar is going to be worth nothing, and then we'll be screwed no matter how you look at it. Obviously, I don't have a solution to that problem simply because I'm not, again, a professional. I don't know those kind of stuff, so I wouldn't have an opinion. What I do know is what I do know, and what I do know is what I see. And if I see the dollar being devalued, no matter what the situation or why the reason, you can expect the markets to go higher. All right, so let's just jump into the XLF real quick. All right, so first chart we're gonna look at is the daily chart of the XLF. I don't really necessarily like this chart too much. The patterns and all that doesn't really look too appealing to me, but it does definitely. I will tell you what I can see, and right now I can see that it is in a confirmed uptrend, at least in a date on the daily chart. I did have a level here. Apparently, I did a analysis before not too long ago, November 9th, and I had a level here at 1494. It didn't quite get there. It actually had a bounce right on this 200 moving average. These two all the lines, the green lines you see is new, including these two mathematical calculations there, and it's new based off of your request. So I did these mathematical calculations. I got 1736 and I got 1851. Okay, so why do I like the 1736? And this green line here means that we're gonna go into resistance, get into resistance very soon. We may actually get a pullback off of this level here already, and that level is about 1719, 1720. I would hit it at 1720, but based on my rules, I would wait for the 1736 with a reversal signal if I was to take this in a reversal as a reversal trade. Or as a pullback or as a short trade. Sorry. In addition to that, we are in an uptrend, so this would be a counter trend trade if that were to happen. Now, what I would need is if you would want me to catch it at the down, so let's just say it goes up and it reverses somewhere over here. As it's coming down, let me know, and I'll do another mathematical calculation, and I can catch or calculate where a potential bounce would take place, and that's where I would actually take the trade, because then that's around at this level, whatever this level might be, is where I would actually trade the XLF, because it is in a confirmed uptrend. So that's you want to be with the trend, right? You want to be with the current. But as of now, because we are heading in an upward direction, I would assume that you want me to look at where resistance would be, and resistance is going to be around here from what I can tell. Now remember, these things can gap up into these levels too, so you got to keep that in mind as well. I also have a $18.51 level here, mathematically calculated, and we also have supporting evidence of a possible pullback if it gets there with this trend line up here and then this line up here. And let me show you where I'm getting these lines from. Alright, so if you take a look on the weekly chart of the XLF, we have this pivot point up here, we have this pivot point over here, and that coincides with the 1736, giving it a little bit more support there. Actually, this is resistance, but support in regard to support that it is resistance. Whoops. Let me just load the drawings again. Oh, I didn't save the drawings. This 1851, I believe I got it from here. Yep. Just like that, you have this pivot point here, pivot, and then we break through this over here, which is fine. Not many people draw trend lines like I do, but you guys know that these trend lines pretty much hold water. We also have a pivot here, and it coincides with the $18.51 level. Let me just draw a line here, just so if we ever have to review this chart again, you guys know I'm not faking it if it does turn out to be working out well, if that makes sense. All right. Hope that was enough information for you. Let me move on to the XHB. All right, for the XHB, I couldn't really get a solid mathematical calculation off of this chart simply because um, you guys know that I get my calculations from a specific pattern. Obviously, I can't tell you what that pattern is, but not all charts make the pattern. But sometimes the patterns or patterns are very ugly, and when the patterns are ugly, I don't validate those patterns as being practical data. Therefore, I will not use it in a situation where I would depend on the mathematical calculation, and that's simply because when I invented it last year, um, I'm sorry, not last year, December 2011, it had to be refined, and that's part of the refinement. If the pattern isn't valid, then neither is the calculation going to be. But what I can tell you is this: we have this doji candle over here. It was not on high volume, so I would not validate this as a short trade. So sure enough, we did go higher, but that doesn't mean this thing couldn't pull back a little bit. Um, we do have the moving averages coming up. And what this guy could be potentially doing is consolidating to the side. And if that happens, then we should get another pop. This is obviously in a confirmed uptrend, and there's nothing else. There's nothing telling me otherwise. Okay, this is creating somewhat of a triangle, so just keep your eye on that before you decide to take a short trade or anything like that. But this stock is in strength, therefore you want to look for a long trade. If you do look for a long trade on this, so you want to wait for a pullback, and the reason why it's in strength is because it's way above these two moving averages here, including the 200 moving average, and it's just been moving up higher. Okay, this is not necessarily a chart that I would like to trade, simply because I don't have enough data to take a trade. But obviously, Favco, you are a much more polished trader than I am, making very good calls. So that's up to you. But that's just in my opinion. Um, Something that I would do is wait for a pullback such as these pullbacks over here. This one actually cut through these two moving averages before making a reversal here. But interestingly enough, just looking at this, you can see this reversal candle being created off of this trend line over here, right? This is just an example. And then on this candle here, if you look at the volume was higher than the past 3 days exactly, and that's where I would have taken a long trade anyway. And then probably after this second day here, I would have had a break even stop, and I would have just been in the money, and I would have let the market stop me out at the low of this candle here, in which case it would have, and it went higher, and then it started dropping back down. So that's what I would do. I would wait for a reversal, to come down, right, and then have some kind of doji candle or whatever, something similar to this, where there's a reversal on higher volume similar to this, and then I would take a long trade. In my opinion, I would stick with staying with the trend. I know I contradict myself by saying that I want to short the market, but even though the market's in an uptrend, but we're short-term traders, and we catch it on the downside and we catch it on the upside, and that's how we make money. So congratulations to all of you who are long, who rode the train all the way up. That's awesome. Unfortunately, I didn't have the cojones to do it. But that's trading. That's just the way it goes. I don't. At first you feel bad because I'm human, but I really don't feel bad because again, I've had this trouble before in my past. When I first started trading, I used to make decisions like that. Like I said, it's not the wrong decision. If it works for you, then great. I mean, that's to be honest, there's no wrong decision. Okay, everybody has their own style and methodology. For my methodology, I didn't take the trade, and I don't feel really that bad about it. It kind of sucks to see how much money I could have made, but at the same time, to be honest, I really don't feel all that bad because I've been through all that before, where I would rush the trade like that, and sometimes I make a lot of money, and sometimes I don't. But those times that I made a lot of money, I was happy, obviously, and it made my day. And then those times that I lost money, it just ruined my whole day, and I gotta go to work in such a bad mood. And normally, a lot of times when I lose the money because I didn't have a stop in place or whatnot, it just wipes out a whole week's worth of upside earnings, and then for one day to just take me out, and I'm now in the negative. So I gotta learn. how to be more disciplined, and I'm still continuing to learn. But the good thing is my emotions aren't hitting me as hard as it used to. And the more you do it, the more you stop out, the more you know, stop out for a loss, small loss. And even if it doesn't work out, meaning you stop out and it still goes in the direction that you want it to go, you know, it's just the institutions stop you out because they know they can, just to get you out of the market so they can continue to push it higher. At first it's like, ooh, you know, I'm not gonna put a stop in anymore because it came down, stopped me out, and then went back up, you know, where I was long. So, you know, it's just one of those things where once you get used to it, then it just becomes like you're a computer, and that's what you want to be. You want to be a black box trader. You guys know what black boxes are, right? They're computer generated trading machines basically, and it's based on algorithms, and it basically trades and does trades based on technical analysis purely, and it doesn't let the news or anything affect it, you know, and you can increase and decrease the algorithm to be more or less detailed or not, and stuff like that. I'm not a programmer myself. I wish I was, but it'd be cool if I could create a program like that. Then I don't even have to worry about listening to the news, or I could listen to the news and not care about it, but just be like, oh wow, that's interesting, and learn more about the fundamentals. But I'm afraid if I learn more about the fundamentals, it's going to skew my decisions in my trading, and it's going to mess up my methodology that's working for me today. So, you know, that's pretty much it. And again, thank you very much for watching these videos. You know, again, you guys are all awesome. And you know, have a good new year. Start this new year in the green, and you know, take care. God bless to you all. Good luck to your trading next week, and hopefully I see you in the next video.